The philosophy that you described seems very logical, but has it been the same from day one? Could you share, experiences from the past that allowed you to shape this philosophy? Any examples that you could think of or quote that led you to what Alder Capital's philosophy is today?
Answer the first question, yes, we have followed our core principles from day one. We don't intend to divulge from it. This is what we have experienced as a core team, and we feel that we can spend valuable time focusing in a narrow sector and create better value out of that rather than trying to do everything. But to answer the second question of learnings, so we did this exercise last year, and it was an exercise where we tried to understand the BSE 500, and we said, let's pull businesses out in B2C and B2B both, and try to understand which businesses actually did extremely well during stressful periods in India, right? And stressful periods in India could be a time of global financial crisis, and even this period that we are talking about, where we had multiple reforms and businesses couldn't do as good as what they could have done. And what we got was surprising, that in a list of 500 companies, there were 70 businesses which managed to continue growing at 10% compounded revenue growth rate and delivered 15% ROEs, which is over and above the cost of capital. And this was a time when things were traumatic, right, from a business cycle perspective. And when you carve that out and you see those businesses, which are the ones which are counter-cyclical to any external shocks and the environment, you notice that bulk of them, a large portion of those, were B2C businesses, which had very high competitive advantages. They had the pricing power, they had the capabilities to expand markets and expand their revenues. So our core philosophy goes in this, that we need to find those businesses which can traverse through these environments. At the same time, the learning is as simple as this. If you find great businesses, which we call it as, which land into the Super 70 list, right? And these are what we call as incredible businesses. You need to hold on to those, right? The power of compounding is incredible, it's magical. And when you hold on to these businesses which seemingly are doing moderate level of growth, fairly much higher level of earnings growth vis-a-vis the broader markets, right? They tend to add value over a long period of time. Before you know it, they're compounding at 15 to 20% per annum at a market cap level, right? And they become multi-baggers. We will talk about this as you have more questions, but quite honestly, our core philosophy all revolves around this essential list that we call it as.
So the Super 70 out of the BSE 500, our client/investors note that these 70 companies, as sir said, clocked a 10% CAGR at 15% ROE even at the worst times, and that possibly is more like an investment universe for Alder Capital.
But I'll add one more thing to it, is not only that they outperformed in terms of growth, they outperformed in terms of ROEs and profit, right? But they also did extremely well in terms of market capitalization outperformance, right, vis-a-vis the benchmark. Okay. And they outperformed the benchmark more than, I think, 2.5 times, right? So essentially, when markets were not delivering great performance, or even at the period post financial crisis when the markets did well, right, these companies extremely outperformed those general businesses across and that environment. So it's just not fundamental outperformance. We just wanted to drive the point that it's also stock performance as well.
Which is what matters at the end of the day.